Okay, guys, so how do we do today? It's the end of the day. So Don Allen for Level Beast here. A leading indicator. We offer a indicator stack and a proprietary system that shows where the market is likely to reverse stall or react. This is a pre-market leading indicator. It will show the levels at 9:15 every single day. You have a quant team working for you, and we release these levels after data research. We distill about 30 different KPIs so that we can get the data here. And once it's released every single day, we're ready to go. So let's take a look at how we did today. Each day, obviously, the levels are significantly different. It depends on what the data tells us, right? And what we're checking here, the purpose of the recaps here is to teach one element of our system and trading, and then to verify that the levels worked out today. So on SPX here, we released the levels at 9:15. The levels and everything said that we had 3 variant zones to the downside. Regime line was at 6849. This is the area where your the Wall Street will have to balance and hedge. So we understood above this area, that 6850, but no more than 6880 is where the target for the day is. Now let's just verify that. Here's our trade plans here. We'll go down to SPX here, right? And we specifically said, we won't read all of it, but we specifically said trade the recovery test of 6880. Reclaim signals gamma reassertion towards 6900, 6920. Failure has layered gap support through 6850 and 6878, right? And so we're talking about a post dislocation. So the other day, things became very dislocated away from our hedging area. You can see that here. So when we come that far away from this hedging area, like a rubber band, we're going to pull back to it. And that's what we're looking for, right? And so we gave you kind of like the layout. All in all, we said 6880. This is our meaningful recovery test post right there, post-catastrophic dump or big gap down. So 6880 is where we were. We also had the remaining gap here for the day. And so out the open, once we also took this, and we'll show you the trade on NQ. Many of you took it. Once we saw a hold at 9:45 in our variant zone, this is a signal to go long and to get into calls. And here is your first major target. Your intermediary target, obviously, is your magnet levels, but is your regime line, right? This signals positive hedging underneath it. If we can't hold there, which we're reverting back to it toward the end of the day, that signals downside pressure, that signals hedging to the downside. So we, again, trade plan for all of the major tickers that we cover. You can see the same thing with the Qs here. We're going to focus a little bit on our trade plan today for NQ, because we did take these trades here, and this was more than 100 points. Some of you guys got 200 points, but once we saw the top-down pressure and the market push down underneath the LIS and then reattempt here, hold, we had, checking the tape, obviously, we had a good indication that the market would pull up. So this is a good indication where what we do is we look at the LIS. This is where Wall Street has to start their day, start their trade. So this is going to be a combination of algos, volume, interest, hedging. All of it's going to start there. Ultimately, the overall, the big daddy of them all, the line here, this regime line, dictates the sentiment. And we're always, the market is, remember, like a stock market, like any market, the stock market has to be in balance. Now, when the market is in balance, that's when it's operating at its finest. Any market has to be in balance. A lopsided market is never operating in a balanced fashion, right? And so this is why you have to hedge. This is why you have to have mechanisms in place to protect you, because when a market is out of balance, then institutions can't really forecast. They can't really predict. They need it to be, net neutral. They need their position to be kind of neutral so that they can trade other assets and still protect themselves. So when the market gets away from the regime line like this, significantly away, and it's already making an attempt up, we're seeing it gravitate towards where volume sits, right? This tells us that the market is trying to get back to balance, even if it's temporarily. That's a great signal. And this tells us once you reclaim the main trading point for the day, once you start to move toward that, you have a great probability of moving to the upside towards this regime line. So this, for some traders, this was a 200-point move. For us, we got a nice trade here. And then once we start to go into these purple areas, our variance zones, that's the time where you want to bring your stop tight, and you're going to see some reactions. You're going to see your sell pressure start to click in. Now remember, this is on screen before the market opens. So when we see stuff like this, we really get excited. It means our data analytics is on point. It means that you're able to use this as a leading indicator, forward forecasting indicator, and you're able to see where sell pressure sits and where you can expect to see sell volume kick in on the first and the second attempt. Ultimately, like any other level or line or zone, it will be broken. However, it won't happen until we see a shift in a pressure there or a shift in volume. And so, excellent day. You saw this. We'll go over to ES. Same thing there. Very nice confluence, right? You can see like a magnet, hard line in the sand. See that? Right there. Can you see that? That's incredible, right? So what we're doing here is we're showing you what the Level Beast market map, Level Beast multi-anchor VWAP indicator does every single day. And we're checking to see, did our trade plan work out? And the answer is yes. 6880 line in the sand. We did post this. Follow us on Instagram, Twitter, Facebook. And so what we'll continue to do is post our pre-market. We post a pre-market layout, and then we post the aftermarket layout, both pictures, and they'll post at 4 p.m. so that you can see that this stuff is the real deal. All right. It's been an awesome day, guys, and we'll keep going with our recaps. One thing we want to point out before we go is ATR, right? So take a look at our ATR. This will give you a good example or good indication, of the extension of the move. So we've got some mathematical calculations, some secret sauce in there where we run our script, and we're looking at how aggressive the move is in relation to our levels and the ATR for the specific stock that we're following. And you can see some are red, some are yellow. That's a cautionary zone, right? Tells us when you see that overlapping with other areas of confluence, like the variance zones and etc., your move is done. So how would you like to know exactly what the highest probability is for your move to be done? How would you like to know where to start? So excellent day today. Very nice day, very nice trading, guys. We'll see you tomorrow. Stay green.